intellect. But I want to start off with the IT space. While a lot of was being made about how IT is coming to a close, a lot of people were bearish. Large cap companies, the commentary has been very positive, and mid cap companies, the delivery this quarter has been optimistic, has been very good, and they have not sounded too shaky about the second half or the next 18 months as well. You just heard Intellect on the channel too, very confident. How are you reading into what's happening with IT currently?
Yeah, you're right. It's large cap versus mid cap. Large cap, basically that decade of growth, I keep saying it, has gone away from them, and it's going to be harder and harder than to keep delivering. And I still don't want to pay 18 times for companies delivering top and bottom line of single digit growth. It's just not working for me. So you get a few banks say like Credit Suisse is now restructuring, but how many times can banks restructure around the world? So I think that decade of growth is gone. So rightly you're seeing more innovative companies which can move quicker into new spaces, where it makes a big difference in terms of their top line and bottom line starting to do well. So that's where we've been looking as well. The kind of more mid-cap IT companies rather than the large ones, because the large ones are going nowhere for some time, I'm afraid.
And Andrew, with mid-caps, it's very difficult to gauge them and judge them. Case in point here is KPIT, pathetic Q4, great Q2. I can pick a number of examples which just point out that it's getting increasingly difficult to read the mid-cap IT model.
Yeah, but that's the same across a lot of mid-caps, Nikunj. It's not just IT, it's all about the management and your belief and in their kind of their plans going forward. Along the way there will be some hiccups. We've seen that. We've seen that even with the kind of large caps as they became large caps in over the last decade or so. So you expect that as long as you understand the reasons and really the strategy hasn't changed. And might just be a blip in the market or slower kind of growth. That's fine, but it's really going back to the management. You've got to have the complete enough utter faith really that the management will deliver over a longer period.
Andrew, what about the ones which could be the disappointing lot? Because up until now, it's the impressive sectors which have come out with the earnings. You've got PSU banks, metals, infrastructure, all those old economy, sectors still left to go by way of earnings. Where do you think the bigger disappointment would kick in?
I'm trying not to focus too much on the earnings. I'm taking a broader view. I really do feel that we're starting to see an improvement in earnings, and there will be obviously companies in certain sectors which don't do well. But overall, the good news is this: is that whilst top line growth might not be great, you're seeing both operational gearing. Starting to help margins, but also the kind of lower raw material prices, because of commodity prices, is having an extra push on the margins. And going forward, you're going to get financial gearing coming in too. So, if anything, I think we're going to see more upgrades and downgrades this quarter. And going forward, I think we'll start to see that momentum now in terms of profitability starting to increase quite markedly. So I'm more optimistic going forward. I can look in the rear view mirror, we know the problems, but it's really what's going to happen going forward. And I think the margin improvements I'm seeing are very heartening, and that's what's giving me more confidence to say that we're probably at the bottom, if not kind of moving forward now in terms of earnings growth.
Andrew, so based on the parameters that you are picking up stocks right now, what's the favorite? I mean, clearly you mentioned you're not looking at earnings. Obviously, you're not looking at a lot of technical parameters. So what forms the top 5 buy ideas, buy sectors that you have right now that you'd be convinced will do well over the course of the next 12 months?
It hasn't changed since the last time we spoke, actually. It's banks, Reliance and Maruti.
Wow.
And I think those will be the continued favourites. Obviously more private banks at the beginning, but interest rates are going to continue to come down. Whilst I'm not a big fan of PSU banks, I think it will give them time to restructure and move forward. But it's the private banks. I mean, HDFC, came out with some great numbers yesterday. They're continuing to take market share and in difficult markets. And so as the economy starts to pick up, this is the only sector I really feel is going to be delivering, not just growth, but share price performance as well.
Well, they're chalk and cheese, Andrew. Maruti, extremely strong performance, probably the most expensive auto name. Reliance, an extremely weak performance until this quarter, of course, which has come about. So you're obviously looking at the different pot boilers differently. My question then is on the third one that you mentioned, which is financials, and you mentioned the fact that interest rates are slated to go down and therefore look at banks. What about NBFCs? Somehow they are portraying a much better show for the last 4 or 6 quarters as compared to the banks. Do you like them over the banks?
No, I like the banking sector more. I mean, some of the NBFCs obviously are suffering from the slowdown in rural growth as well. So one or two are standing out. I mean, the Bajaj Auto Finance numbers were fantastic as well. But again, you're paying a price for that. I'm not saying you shouldn't pay for quality, but you're paying a price for that type of quality. So I really see that it's going to be the private banks where you're going to get the share price performance going forward. I think they're going to be the leaders for the market over the next 6 months.
Andrew, what is the sense that you're getting about the rest of the market though? We've nicely climbed above 8250, but considering half of the earnings are still about to play out, you've got that big political overhang of the Bihar election outcome. Does it seem like the market is now going to just spend time consolidating, or do you think there is significant upside from these levels as well in the light of this global rally that is playing out, especially aided by Draghi's comments overnight?
Yeah, so I think global events are really going to be as we saw in August, are going to play the bigger impact for India, because if global, the global economy is starting to stabilize or will move forward, that's going to be a great backdrop for India. So what I'm looking for markets to move higher would be a few things. One, next week there's a lot of meetings in China about the next 5-year plan, and whilst we've had monetary stimulus from China, I still think we need some fiscal stimulus, whether that's through tax incentives, either corporate or for the individual, not quite sure, but some fiscal stimulus is needed from China just to reassure us that the 6 or 6.5% growth, whichever people want to look at, is actually achievable and sustainable. So I think China still holds the key for sentiment. And around the world, what the problem has been is obviously deflation and obviously inflation not picking up. And again, I think we've seen a lot of monetary policy, and whilst I heard Draghi say we might be more accommodative, I still think fiscal stimulus both in Europe and the US is probably coming, and that would hopefully get the consumer. I mean, don't forget, the jobs, in terms of unemployment, is running at the lowest levels for many years now in the US, but people aren't going out and spending, so they need to be helped along the way. So maybe again, whether it's through tax or some fiscal kind of stimulus, we'll get them spending more money, and I think that's where I see the fill-up for the market. So those few things have to happen globally to keep that backdrop kind of very positive. Obviously, the Bihar elections, I have no idea who's going to win, but if it is the BJP, then obviously that's a positive for India. And then corporate earnings, as I've already mentioned, we're expecting now, the upgrades to start. And once they start, they will be quite significant because of the operational gearing that India has as we go forward. So I'm still optimistic, but obviously some of these events have to play out first. And
we really appreciate your time, and glad you could join us. And and love your jacket color. These are English colors. I mean, I've never seen you wear such a navy blue jacket.
I'm not sure it's English colours, but yeah, probably. It's not my favourite football team colours, that's for sure.
All right.
What is the favourite football team though, Andrew?
It's Manchester United. And now I think about it, there's a big game at the weekend with Manchester City, so I shouldn't be wearing blue, right?
Yeah. I would have asked
Andrew.
Andrew.
That's all right. He's wearing the red tie. That's all right.
I would have asked Andrew if he's bought into HCL Tech as a result of the deal that they did with Man U as well, but we'll save that conversation for another day. Thanks so much, Andrew. All the best for the game.
Thank you. Thanks.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.